thought that that little bit of relief would have given the markets a little bit of relief. We didn't really see that today.
Saw it yesterday. I mean, or saw when you saw it or 2 days ago in the form of General Motors, and you saw that bounce when they rolled it back to April, I guess. But, diminishing marginal returns. And I do think they're trying to sort of walk this dance between making sure the market hangs in there and talking tough on tariffs. And that's a difficult dance or difficult tightrope to navigate, but that's the one they're trying to do. With that said, the October low, October 31st, I think, was 5,700-ish, and we're right there. Critical support levels, a lot of technical damage being done in the meantime. And again, a VIX at basically 24 and change for a prolonged period of time is something we've been talking about. VIX is going to stay elevated, and I think that's why you're going to continue to see these wild swings.
We were like 28 on the VIX December 18th. We were at 40-ish back over the summer when we had that huge pullback.
Yeah, and I think all of us agree when you see that sort of spike in the VIX, it's probably getting near a time where the sell-off is getting a bit overdone, and we see bounces here. I think the volatility that we've seen in this range that Guy just talked about, between like 5,850 and 5,700, it's a tough level here, just technically. I'll just say this, though, as the silver lining guy on the desk here.
Yeah, of course. Everybody knows that.
You just think of, like, the hardest hit names in this sell-off. I mean, they're getting a little oversold. They're getting today felt very panicky. Let's be very clear. But the S&P is only down 2.5%. And so when you think about the internals of the broad market, that's probably a pretty good thing. You're going to take a lot of the froth out. You're going to get valuations back to levels where we think they're kind of appropriate. I know there was a lot of talk just 2 weeks ago. The S&P trading 24 times forward earnings. A lot of that is front-end loaded to some of those biggest names. So, again, some of the damage that's being done in the growthiest sorts of names, I actually think it's pretty decent setup if you're thinking about the S&P that's now off 6.5% from those recent highs.
So I'm in the difficult position of agreeing with Dan, who's just the ray of sunshine here. I mean, the VIX was up, closed up almost 3, so just under 25. It's not in the panic. I don't think it's super panicky, but it's definitely, as I said, things trading down in integers at a time. I find that interesting. I did a little bit of buying today. I covered some KRE that I was short against the long money centers, but it didn't do a lot else. But I do think that, the names that were supercharged are just getting annihilated, but still it doesn't take them to reasonable valuations, right? So I think there's probably some room there, but it's not a monolith. There are things that are, I think, attractive. I actually think, we'll get to it later, but discretionary, some of the retailers, I think, have really gotten.
It's the